Hello and welcome to the weekly update here from WoW. So what are we going to cover? Well, we're going to have a look at again, I guess, how Bitcoin is going overall, what might it affect it moving forward, what's happening in the general markets and the macro environment, and where to from here. So just to start with, how has Bitcoin been doing over the years in comparison to other assets? What would you might say would be the best performing assets since the late 2000s? Would you say Bitcoin? I think most people would. Well, let's have a look. Well, here we have a chart comparing Bitcoin and others. So Bitcoin has done really well. Again, you can see it's traded generally well over a period of time, and it's up about 380%. So over that period of time, it's definitely seen a positive return during that phase. But as you can see, there's other projects have done even better. Of course, the darling of AI, which is Nvidia, has done incredibly well. And as you can see here from the figures, you've got about 860% upswing. So, nearly a 9x during that same period of time. But here's the really interesting one. We can see here the company by Michael Saylor, MicroStrategy, who pretty much are the champions now of Bitcoin, have specifically bought Bitcoin and made it available in a regulated way, so that the big investors in the world have a way of buying into Bitcoin. Most of these companies can't just buy Bitcoin itself, but they can buy into a company that's basing their whole strategy moving forward into buying Bitcoin. And so we can see here, while Bitcoin has done well, MicroStrategy, with this strategy in place, is doing even better. And of course, Michael Saylor himself has become the absolute champion of Bitcoin and is predicting by 2045 that one Bitcoin will be worth 13 million each. So, you can imagine if you can take the longer term view and to buy a Bitcoin now, a lot of people would say, oh, Bitcoin's too expensive now. It's 60, 65, $70,000. It makes no sense to buy it now. It used to be 3,000, 1,000, whatever it was before. But if it was to do what Michael Saylor says, then that would be from here over a 200x over that period of time. But of course, you're waiting from, say, 24 to 45. That's 20 years. But if you were sure of an asset making that sort of returns, would it be worth it to wait that long? I think most people would say yes. And I suppose the lesson here really is, scale out a little bit. A lot of people are looking at, Bitcoin going up on the hour or up or down every 4 hours or even on the daily chart, and they're going, oh no, it's gone down a little bit, or oh, it's going up. We need to get into it straight away. And it's reactive, and it's what's going to happen tomorrow, what's going to happen next week. Whereas if you look at these projects, whether it's Bitcoin or other projects within crypto, if you take the longer term view and you believe in whatever that project is, whether that's Bitcoin, Ethereum, or something else, then you need to take the long-term view if you truly want to win. This is something that we're really trying to get across into the WoW ecosystem in our community, is take the longer-term view, whether that's buying into Bitcoin, Ethereum, or a mid-cap, low-cap, or even projects that are not yet on exchange. You must be prepared to give them time. It's the patient always win, whether that's in the NASDAQ or in the crypto world. It's the patient tends to win, provided you're buying into the right projects in the first place. So how is Bitcoin going? Well, let's have a quick look at the chart. Again, I'm not a chartist, so take this with a pinch of salt. I'm literally just giving my musings on what I see happening here. So let's just go on to the daily. So again, each bar here is represents one day. Let me just expand that out a little bit. Here we go. So again, you can see general sideways action for the last 7 or 8 months. In general, it's in a downward motion. Okay. It's sideways overall. It's not drastically going up, drastically going down, but it's in a general sideways motion, but generally downwards. So you can see here, we've had a low way back when, and we've put in lower lows as we've gone along. And again, from the upper end, we have, we put in our high, all-time high back here. And then you can see it's touched off this line, this declining line, meaning that each time it's made another effort to get to all-time high or even beat it, it's fallen shorter and shorter each time. So there's that general sign of overall weakness in Bitcoin. Why is that? Because there is general uncertainty in the market, and in particular, I believe, in the macro environment. So it's not necessarily that there's something not good within Bitcoin or not good within crypto. I think the fundamentals of Bitcoin and crypto in general terms have never been stronger. There's never been wider adoption. There's never been, more countries, institutions, high net worths, the wealthy, looking at the likes of Bitcoin as an avenue and maybe expand out beyond Bitcoin into other cryptocurrencies. There's never been so much positive talk about Bitcoin. We even have, the presidential elections, them talking about crypto. Though it must be said, there was a lot of people looking forward to the debate between Camilla and Trump and expecting crypto to get a pretty significant mention in there. It was never mentioned. Bitcoin or crypto was never mentioned by either candidate. And I think that took probably a lot of people by surprise. But there is no question that crypto is very important and central to the overall outcome. Most people would believe that Trump and the Republican Party would be significantly more positive towards crypto than the Democrats have shown to be over the last, 4 years, of which, of course, Kamala Harris was vice president. They have absolutely clamped down on everybody and anybody in the US who's doing anything with in the crypto space. Will we see more of the same if Camilla comes into power? Most people expect so. But ultimately, my belief is no matter who comes in the longer term frame, so in the 6 months, 12 months, 2 years, 5 years down the road, we're going to see very positive things for crypto. In the short term, yes, I would believe that we'll see a much more positive outcome with Trump in board than Kamala Harris. But in the medium term, probably too. But certainly in longer term, I don't think it's going to matter. Yeah, let's see. But again, I think a lot of the sideways action and sort of general downward action can be attributed to the fact of the more the macro environment details rather than the specifics of what's happening within crypto. I think there's more and more really positive projects coming out, projects that make money in the real world, like DePIN, decentralized physical infrastructure, DVEN, decentralized virtual infrastructure, DeFi, decentralized finance, real world assets, et cetera, et cetera. These are areas that are going to make money within the real world on a Web3 platform. So I think there's an awful lot to be positive about in that space. But where to from here in the sort of short to medium term? Let me just move this aside. And we've seen here again, we spoke about how the longer term time periods make more sense in this. But let's look at what's happening right now. So again, we saw the CPI inflation figures fall to 2.5 in expectation with the 2.5 that was expected. Likewise, the core CPI, so it's the CPI with a number of details pulled out, and that also has remained unchanged is at 3.2, again, as per expectations. What's that actually mean? Well, what this means is it now is extremely likely that we'll see a rate cut. I think that's almost a certainty. It's what size of rate cut. And the vast majority believe it'll be the 0.25%. Some people think it may be 0.5. I think that's highly unlikely because the two main things they're watching here is they want this inflation figure to keep coming down. They want it to get to 2%. It's still 25% over their target rate, but of course it has come down significantly. But the other side of it is jobs. So if they start to decrease the in interest rates too quickly, they're afraid that then inflation will tick back up. But also, if they don't decrease quickly enough or buy enough, that we could move in towards a recession. At the moment, they're saying, okay, our jobs market still looks strong despite the information that's come out over the last number of weeks. Much of it much more negative than was originally anticipated. But despite that, they still feel that job markets is still good. The stock market is strong. Residential and all the rest of it is holding strong in general terms. But I think there's a lag effect, the lag effect of the increased interest rates over a long period of time. And most of that is yet to come true. And I think there's still a very significant chance of recession. Maybe they'll get this soft landing thing right. I think it's highly unlikely, and history would show incredibly unlikely. So what happens from here? Well, we probably see interest rate cuts of 0.25% in about a week's time. And from there, I don't particularly think that's going to have any great effect on the crypto market because it's already baked in. People are aware of this. If the 0.5 happened to come in, which I think is unlikely, maybe we see a bounce from there. But ultimately, I think the main thing the market's going to look for is not the fact that the rate cut is coming in, but how many more of them are likely to happen over the next few months and going into the start of next year. I think it's highly likely that they'll start talking about, significant more cuts coming over the next number of months. The market probably will react reasonably positively to that, but all on the backdrop of uncertainty around what's happening with the elections. And, we've at least another month anyway of that uncertainty. Maybe it starts coming clear, a couple of weeks before the election as to who might get elected. But I think that's unlikely because it's a close call at the moment. It's unlikely to come clear cut just before elections. So I think it moves right into November before we get clarity on that area. So with that in mind, do I see a sudden, reaction upwards in crypto? I think that's unlikely. Is there a possibility for a sudden move downwards? I think there's every chance of that. I think the chart for me, I still think we have to visit 43K. I've said this, as I'm sure you're bored of hearing now for many months. Of course, it doesn't mean that that's going to happen. It's just my gut feeling based on the macroeconomics. I think there's another flush out that is needed before we get clear out and get ready for an absolute bull run. You know, I think there's information out there that carries a lot of risk, and if some of that were to come true, as in stuff we're aware of, then there's the potential for a very, very strong pullback. I'm not aware of anything that potentially could happen that could absolutely likely drive this to the moon. Of course, we could get a black swan event going either way. In other words, a black swan event is usually seen to be, an unexpected account happening that could have a very dramatic effect on the price. Most people view that as a dramatically downwards because that's where it tends to happen. But maybe there's some dramatic announcement or event that could, be a positive black swan where the price rockets. Again, by definition, I can't see what that is. But it's possible, but I think it's at the very low end of possibility. Whereas I think there's absolute possibility we see something very significant that knocks Bitcoin down further in advance of an all-out bull run. So what's happening out there and why is this important? So I want to talk about the global interest rates for a second. So again, we've just spoke about the US and then, the likelihood of a 0.25 reduction in interest rates, and that to be followed by many more 0.25. So, could add up to, a 2% overall reduction in the next couple of months, few months moving into early next year. That's absolutely a possibility and probably likely at this stage. Why is that important? Well, one of the reasons, there's two reasons. Well, there's probably many reasons, but there's two certain reasons that we should be aware of that. Of course, again, I'm sure most of you have heard me talk about the yen carry and others as well. But basically, just to describe it briefly again. So at the moment, as you can see, this red line here, you can borrow yen. So let's say you have a bank account, you're a big corporate and you have a bank account, or you're an institution or a major investor, and you have accounts in, let's say, the Bank of China or any bank, or sorry, in Japan, and you have, a major account there and you can borrow major money. Let's just say, for argument's sake, you can borrow $1 billion worth of yen. You take that yen that you're borrowing at a zero interest rate, it's just recently moved up 0.25, but you can borrow it there, move that across, convert it to dollars, and buy $1 billion worth of assets in the NASDAQ, or you buy $1 billion worth of, let's say $1 billion worth of treasuries. And because the interest rates are high in America, you're making, let's say, 5% on that. So you're borrowing it for nearly zero and you're making 5%. Easy money. But where the trick comes into all of this is, or what has happened recently is, the Bank of Japan have increased the interest rates by 0.25%. At the same time, we know that America are going to start reducing interest rates. So most people believe that Japan are gradually going to start increasing their interest rates, and on the other side, we have America reducing their interest rates. So the gap in between is getting smaller and smaller. And because there's an awful lot of leverage involved, this becomes unattainable. And so what happens? Well, the people that have borrowed the big money in Japan start to sell, for example, let's say those treasuries, take those dollars and sell those dollars for yen in order to pay back the yen debt. What does that cause? Well, when you're selling dollars and buying yen, it causes the yen to get stronger against the dollar, which means for the people that are operating in dollars but paying off a yen debt, this debt is becoming more and more and more significant. So what happens? People start to sell out of the dollar assets, so treasuries, stock market, whatever they might be into. So that's causing sell pressure over here. It's causing the dollar to get weaker, the yen to get stronger in order to pay back. So now if you owe money, the amount you owe is in dollar terms is getting more and more and more. So then you get this, and bear in mind, there's $4 trillion in this carry from one theater, various companies and groups doing something like this. So the more the more people that sell, the more expensive it's going to get as the yen gets more, gets stronger and stronger against the dollar. So then you get this rush. Once it starts, it can really take over, and it can have a very fast unwind, which means you have a massive sell pressure on the likes of the stock market, the likes of crypto, the likes of treasuries, any US based assets. So we saw something like this happen at the start of August, and it caused Bitcoin to drop by 15% in the space of about 24 hours, say 48 hours. If it were to happen again, if the Bank of Japan decide we are going to increase interest rates again, and we know America are starting to reduce interest rates, we could see a real rush to this of people trying to get in ahead of everyone else before making the yen too strong against the dollar. And you could have a massive unwind of risk on assets. So that's a massive risk factor that we're aware is there, but may or may not happen. On the other side of that, and on the positive side of that, is we have a situation where there's over 6 trillion in assets in the money markets. And what makes the money markets effective is the high interest rates coming set in the US. If those high interest rates are starting to reduce, as we know they're about to, there's every possibility people move out of the money markets and back into other assets, such as risk on assets or the likes of the treasuries. So that has a potential balancing effect, but it's a case of if they were both to happen around the same time equally, then they would balance themselves off. But for example, if the yen carry happened first, we'd have that massive pullback, and then gradually money coming from the money markets, that would be a slower process and likely to come in behind, and that could be the catalyst for us to go into a bull run. So there's a lot happening in the macro environment that has a very direct effect on risk on assets, and of course Bitcoin and the likes of cryptocurrency as well. So there's a lot to keep an eye on. On top of all of that, let's look at history. We can see here in the last, and we spoke earlier about, what if the Republicans win, what if the Democrats win? We've seen in history it hasn't mattered to them. When the Republicans won back in 1617, we had a huge bull run. When the Democrats won the following 4 years, 2021, we had a massive bull run. Do we know who's going to win yet? No, we don't. Will it make a difference? Who knows? I think it will make a difference, but I think ultimately we will still have a bull run. I just think it would probably be a bigger one under a Republican win, but who's to know? Here's another very interesting chart. If you look at this, you'll see, and I've mentioned this before, I think interest rates being reduced overall is a positive thing for risk on assets. I'm not sure it's going to be a positive thing for them immediately. And again, in charts I've looked at before and shown on here before, it isn't when the interest rates get reduced that we see positive for risk on assets. Usually there's a delay of a number of months as the interest rates reduce down, and that comes out through the money markets and creates cheaper money. Then we start to see the prices of risk on assets move up, but it usually takes a number of months. What really causes the upside for risk on assets is global liquidity. And let's look at that and see the history of it. If you look at the first breakout here, going back to sort of 2014, you can see just when this green line, the liquidity, breaks through this red line, we can see a bull market up here in Bitcoin. Likewise, second time round in around 17, we saw a huge bull market again when global liquidity broke out. Again, we see it here back in 2020. Again, it breaks the line, and again, we have a massive bull run. Well, guess what's just starting to happen? That liquidity is just starting to break out again. So are we getting lined up here for the next big bull run? And if we do, how high can it go? Obviously, they've sort of a 500K here marked in for Bitcoin. Obviously, that's very much a guesstimate, as all these ideas are. But how high could it go? And what has happened in the past? Well, sorry, just this is the other thing I mentioned a while ago. I should have had this up further. The 6.3 trillion in assets that I was talking about, and all this money being tied into the money markets, and you can see it's ever increasing. But will that start to decrease when we see interest rates start to reduce? I think the answer is highly likely. This is the one I was looking for. So this is a log scale linear regression channel. What's that mean? Well, it's just another way of recording information. But if you look at the middle line here, this gray line, that's the median. That's that's your sort of average trend line. But if you look at the first blue line above it, that's what they call one deviation overbought, and the top blue line is two deviations overbought. And likewise underneath, the first purple line is one deviation oversold, the second one is two deviations oversold. What's that all mean? Well, if you go back here again to sort of 2014, this first green vertical line, you can see that at that time, Bitcoin went two full, in fact, slightly over two deviations overbought to hit that bull run. Following again in 17, you can see again it hit that two standard deviations off the median during that bull run. And then in more recent times in 21, you can see here that it got just over, about 1 to 1.5 deviations overbought. So slightly less. So it looks like they're sort of ever decreasing, but only very slightly, going outside that standard deviation during a bull run. Well, if you look at it now, we're one standard deviation oversold. If that were only to go back to the median, forget going up to the one standard deviation, but just the median, you can see there that would take the value of Bitcoin over 300 grand, probably 350 to 400 here, just basically off the chart. Imagine then if we were to go to just scratch one deviation. Bear in mind, it's always gone over one deviation. But if it just made that one deviation, that's over $1 million Bitcoin. So that gives, some indication if we're to follow history and follow the likes of these linear regression channels, the potential upside for Bitcoin is absolutely massive. So for me, my summary in all of this is this. If we go according to history, and if it goes something similar, then you start to see a bull run approximately, weeks to a couple of months after the actual election. In all cases so far, it has been huge bull upswing from there. If it goes for similar multiples than it's done before, or even following the previous chart, the upside all-time high is usually significant from where it is right now. If we go according to history, we would see that altcoins will follow that at a later date. And so the point is, how do you set yourself up for all of this? And so it is my opinion that first and foremost, as per normal, we will see Bitcoin run first. And more now than ever, because Bitcoin is now also being backed by institutional buyers in a major way. There's ETFs that, while there's been outflows in the last week or so, that's pretty normal for September. When October comes around again, I think we see inflows again. But overall, Bitcoin is being backed heavily now by some of the biggest money in the world. So I think it's highly likely that not only does Bitcoin move first and Ethereum soon after, as per normal, I think we see a bigger lag effect between when that happens and money moves into the altcoin market. In either case, whether it's as per normal or takes a little bit longer, if you're looking to buy into Bitcoin and that's your main thing, well, then you might want to position yourself. Maybe you should already be positioned. Maybe you're starting to position yourself now. Even if there is a pullback, let's just say, for argument's sake, you bought in now at, the sort of 57 mark that it is. And let's say it came back to 43. Fair enough. You could say, okay, I bought it a little bit high. It's come back now. But ultimately, if you believe in it repeating itself and going to 250, 300 or much higher, in either case, you've bought in very well. If Bitcoin is not your thing, if you're looking more for altcoins and the potential bigger upsides, then there is no panic. Bitcoin will move first, I believe. And if that is the case, you can wait for that to happen. So if there is a pullback in the market, then that might be an opportunity to buy in. If you believe Bitcoin is going to go where it's going to go, then the altcoins will become cheaper in that pullback, and you can buy in as it go, from there as it goes up, or DCA as it goes down. But uh, but let's say that big pullback doesn't happen. Well, once again, you'll see what Bitcoin does. You'll see Bitcoin make up its mind and decide when it starts going for that all-time high and all the rest. And you can start moving into your altcoins then. In either case, you can wait to see what Bitcoin does first. So there's many ways to skin a cat. It all depends on your own portfolio, what you're planning on having in it, what your risk appetite is, what your time frame is. If you're trying to make money in a month's time, 2 months' time, this information is of very little use to you, I would suggest. If you've got a longer term time scale, 6 months, 12 months, 24 months, and beyond, then this, I believe, is the information that could be very useful to you in making up your mind. If you want me to start talking and moving in, doing some videos on portfolio, what you should have in your portfolio and the conditions, depending on your own situation, and go through the detail of that, I'm quite happy to do so. I'm quite happy to look into projects that might be of interest. I'm quite happy to look into overlapping projects. For example, I mentioned before, if you believe Solano is going to do really well and DeFi is going to do really well, well, let's find a really good DeFi Solano project. And then let's look at the next one that might be coming up that gives you that upside. I did mention that in the last video, got almost no feedback to that, so I haven't done anything in the meantime. If this is something you'd like me to do, and there's a lot of people saying that, well, then I'll go and create that information. And if there's that, that's no problem. But in general terms, that's the update. Again, the summary of it is take your time, don't panic, but plan. Work out what is your plan. What would you like to have in your portfolio? How much you're prepared to risk? Do you have money outside of crypto? If you do, that might have very implications as to how much risk you want to take within crypto. Likewise, if you have nothing outside of crypto and crypto is everything, that also should have some bearings on your decision. So with that, it's just a case of keeping an eye on what's happening in the market, but more importantly than anything, get educated, get yourself up to speed, and get ready, because I do believe we will see the biggest bull market we've ever seen.